This is kind of how gross to net would look like. We have $10,000 is the gross pay. This is like, the salary amount. Let's say it's $10,000 a month. So this is like 120K salary. Okay, 10,000 a month. Of that 2,000, we're estimating 20% is going to be taken out as income tax. We just calculated the OASDI components. We assume they're having some contribution for healthcare. And it looks like this employee has some charitable contribution that they're taking out of every paycheck. You add up all this. These are all the withholdings. You get this, and then 10,000 minus this, and this gives you the take-home pay. So the employee will get this amount as a check that they deposit of the total 10,000 that they earned. Okay, and remember, all this stuff, the employer is not benefiting from any of this. This is all stuff that the employee owes. Okay, this is the employee's income tax. This is the employee's portion of contributing to their Social Security and Medicare. This is how much they owe towards their portion of healthcare. Okay, so this is this is the full amount of the expense to the employer. Okay, they're actually paying the employee. This is the compensation to the employee. Okay, this 10,000, of which this much is actually going to their bank account, and then the employee is contributing all this other stuff to all these other places. Okay, so again, the key thing to remember is that this 10,000 is fully an expense to the employer. Okay, so then we'll tabulate all this information into a register. Okay, so you can see here, these are all of our employees. Um, this is the earnings. So you have beginning balance, how much they earned in the current period. So this is a current period. And then beginning balance plus what they earned is going to give you this ending balance. Okay. And then you're going to have all the different components of withholding here. We're going to do one of these, so don't worry. You're going to work with this. OASDI, Medicare, income tax, health insurance, other, and then you add it up to a total. And you can see here that their net pay, their take-home pay, is just equal to this minus this total withholding. And it's the same for all these people. One thing to notice is you should go through and see which employees, if any, crossed over the OASDI limit. Okay, so you can look at this guy. No, because the beginning and ending balance are both under the limit. This person, beginning, ending balance, both under the limit. All of these, okay, except for this person. You can see the beginning balance is under the limit, ending balance is over the limit. So this James Colon, we're going to have to do that special calculation to get to this OASDI number, right? This one's going to require that special calculation because this person crossed over the border of the limit. Okay, so now you will have a journal entry. Okay, so just based on this information, you can see here total gross pay is $28,580. You can see that the salary and wage expense is $28,580. You can see that the take-home pay total is $19,727. You can see that the salary and wages payable is also $19,727. All this other stuff are liabilities that the employer is going to pay to the government or insurance premium to Kaiser or whoever. It's all money that's going to go to third parties, okay, not the employee. But the total of it is still an expense to the employer. Okay, so you'll see it reflected in this journal entry. And so, like this 14,019, you'll send this to the Social Security Administration. You'll send this, like this one. This is the biggest one. This is the income tax. This is going to the IRS. And what they'll do is give your Social Security number because this is actually money you owe. So your employer will be like, this is for, whatever, 999,998,661. Okay. They're going to give this information of how much they're sending and your social security information, because this is technically your money that the employer is sending on your behalf to the IRS. Okay, and it'll be identified as your money. And then, of course, when you have payday, so this is the journal entry that happens when you recognize the expense. You have a payable here, and then this is actually when you pay the employees. Okay, you're going to give them cash. You're going to get rid of this payable.